So, hey everybody, welcome to today's session. In today's session, we are going to be backtesting Eurjpy. So, with that, before we start backtesting, obviously, as you know, we have to look first at the stats for the past 3 months, how we have traded or how this pair has performed according to our edge in the market. Yesterday with Euro USD, we had a 69% win rate. So today with Eurjpy, these are the stats. So we took a total of 13 trades. Okay, so we took a total of 13 trades. 13 trades, 6 were losers, and 3 were break even, 4 were wins, right? 1, 2, 3, 4. Yeah. So we had 4 wins, 3 break evens, and 6 losers. Obviously, as you can see here, yesterday with Euro USD, we had more wins than we had less stops and more wins. With Eurjpy, we have more that are stopped out than the ones that are actually winners. So, and the win rate, so we ended up having a total of 2.7 R. That means if you risked 1% per each trade, you would have had 2.7. If you risked So if you risked 2% per trade, you would have had about 5.2 or something, right? And our win rate is about 53. I just estimated it to 50, but it's about 53 actually. I don't know, I wrote 50, so it's about 53. So it's very low, very, very low. So we can see like Eurjpy for the past 3 months, this pair hasn't really been working out. So what we are going to be doing, instead of looking at potential trades we could have taken by following, or like we backtested Euro USD yesterday, with Eurjpy today we are going to be doing something different. With Eurjpy today, what we're going to be backtesting are the trades that we took, that most of them were the ones that were stopped out. These are the ones that I'm actually more concerned about, because they say you can actually learn more about trading from your losers than your winners, right? Yesterday, I didn't feel the need to do that on Euro USD because we had a lot of wins. Our win rate was 69. It was beautiful. But with Eurjpy, our win rate is 53%. There are more losers than winners. I hate this. I want to see more wins. So we're going to be backtesting the trades that we took and see what we could have avoided to avoid these losses. So with that being said, we're going to be taking a look at the trades that we took during the months. Please excuse my pronunciation. English isn't a native language for me. They say out here we have a saying that says English came with a boat. It's a language that came with a boat. So yeah, okay, so we're going to start off with the first trade of the month. We took it on June 7th. We took it on June 7th. This was the first trade that we took amongst the first 3 months. It was the trade that we took on June 7th. So this trade, we actually managed to get about 1% from it. So you see prices was in this kind of a downtrend, and then I saw prices broke above this descending trend line and this structure, right, giving us some kind of a retest on this structure. But one thing was clear: this bullish momentum was very strong. Once I saw that retest, I pulled the trigger. So we actually took this trade on 30 minutes. So Alt G 2023, it was June 7th. Okay. So we actually took this trade on the 30 minutes. So the trend line had created something like this. Oh. And this structure had just been broken and retested. Once I saw this happen with this crazy momentum, before even this candle closed, I actually pulled the trigger. I remember calling out the trade while it was somewhere here, right? No, actually this candle had already closed. It was this second candle. It was retracing, and then after it did this retracement, started pulling back up, I called the trade right there. So obviously the trade went in our direction, in our favor at first, pushing at least 1 hour. The trade pushed at least 1 hour. 28, obviously you can see it went way past 1 hour and then started retracing. After this retracement, I was like, okay, cool, because we took this trade. You can see here it was in New York. Prices did all this during the Asian session, retraced, and then during the London session it started pushing back up again. This was pre-New York, and then prices started retracing again. I was like, okay, if you remember yesterday in our trade, in our back testing, I told you guys I hate staying in a trade for long that isn't advancing, that's just consolidating. Why hold a trade that's just consolidating while you can get other opportunities out there? Because imagine you take this trade and then you get stopped out at break even, or maybe even stop loss if you're not yet at break even, and then you still have the loss of the swap, because you know if you hold the trade overnight you get the swap fees, right? So I hate holding trades for long that aren't increasing or they aren't moving in my direction. So I told everybody while the trade was started retracing again, because it failed to break this high, I told everybody, guys, this trade doesn't look like it has enough momentum to break above this structure, just close the trade. So we closed the trade while it was about 1 hour. It was somewhere here. I remember it was after this candle here, and it indicated like prices are just pushing lower. I was like, guys, we need to exit this trade. So it was about 1 point something hour, but I just consider it 1 hour, right? So we closed that trade right there and we exited the trade. But you can see prices started retracing and then kept on pushing higher. Didn't stop us out, kept on pushing higher, and then eventually went all the way until it hit our take profit, our targets. So what can we learn from this trade? With this trade, obviously we can actually we can have that virtue of, or it implies that we should be more patient with our trades, sure, but I'm not really going to change my trades just off this start, because if you remember what I told you last time, that most of the swing trades that we're actually holding, because for instance, if you look at this trade, it started on Wednesday, take profit was hit on Tuesday the coming week. So obviously this was a swing trade, but the win rate of swing trades nowadays is very, very low. So if we actually decide to go back to swing trading, we'll have to agree that we accept our win rate to go lower, because currently our win rate is at 61%. Now, if we accept and say we're going to be swing traders, our win rate will drop significantly from there all the way to, I remember with swing trades, it was about 49-50%. So I really don't like that. So this trade, obviously, if you ask me, the performance of it, it was okay, it was good, based off the structure that we had at the moment, because it was ranging, it didn't really have that much momentum. So the way we managed it at the time was perfect. But obviously it went and hit take profits without us being in the trade, and that's okay. That's okay. It happens. But obviously we understand, like in the long run, our day trades will actually outperform these swing trades. So it's just part of the game. So this trade was the first trade of the month that we took, and then the second trade of the month that we took was just the following day. So we took this trade on the 7th, and then on the 8th we took another trade, right? On the 8th we did take another trade. It was a sell trade. So let me, it was on the 15 minute. Okay, Alt G, 8th. Okay, there we are. So this trade, we did take it. It was in the New York session. We took a sell. We saw this structure formation here. The prices were actually bouncing off this structure, not looking as if they are pushing any higher, right? And then we also saw that prices, how did I draw that trend line? Okay, so it was supposed to be something like this, but for some reason here, like with the data or with the photo I have on my phone, it indicates that the trade or the structure or something. Okay, let me just put it like that. This trend line actually touched here on this photo that I have on my phone. For some reason here it's not. I'm not sure why. But okay, so the reason we took this, we took a sell here. So we took a sell. We saw prices had broken below here, this trend line, and then we just pulled the trigger right there. So our entry was about 149,632, and then profits were about 148.664, and our stop was 149,823. Right. So this was the trade that you called. So you can see here, okay. So you can see here, let me remove these. Let me put it at some kind of a bar replay. So the time we took the trade was somewhere here. Something like this. While the trade was somewhere here, we called the short. So it did look like a decent trade, but we got stopped out of this trade. Now, so the way, let's play it. So you see, we already wicked out of the trade, and then prices started ranging again, and eventually kept on pushing higher. So if you ask me, like, what mistake did we do in this trade? Or what's the one thing that we messed up here? Okay, what's going on? Okay, here we are. So what's the one thing that we didn't really consider while pulling this trigger? Well, it's very obvious and it's right in front of our face. Like, if you zoom out here, let's zoom out. What's the trend? The trend started here, created a low, lower high, lower low, lower high, lower low. Prices broke above this high, gave us a retest, and we even took a trade here and got a winner out of it. And then prices started ranging, but still prices have created a higher high and a higher low, being this right here is the higher low, as this was the most recent low. So that means prices were in an uptrend. Why did we take a sell? That's where we messed up. We should never have taken this trade here, as prices, first and foremost, were on a support structure, and the trend was still bullish. So this trade right here should never have been called, right? So this, I don't know, man. I don't know what I was thinking, but this trade right here shouldn't have been called. let's see, maybe I had, this is the 15-minute, obviously. So let's see how the higher time frames are saying. Okay, so the higher time frames, okay, so we see prices were indicating a lack of momentum. This is from the daily. The daily had just closed, like the previous day, had just closed with a solid bullish momentum. So this right here, this right here, yeah, this shouldn't have happened. Like, I fully acknowledge this is on me. This mistake is on me, because this trade, this is a rookie mistake. Like, I shouldn't be doing this. Like, this mistake right here, we shouldn't have called this trade. Yeah, no. Because the trend was bullish. Yesterday's candle was bullish. No way in hell should we have been looking for a sell here. So yeah, this was just a bad trade. So we got our first loss from Eurjpy right there. That was our first loss. Yeah. Okay, so the following trade was on June 22nd. Shit. I don't know why I call that trade, man. It's okay. Anyways, but at least, you know, sometimes you gotta acknowledge your mistakes. That's how you grow. So it's all about realizing you did a mistake, accepting it, and moving on from there, right? The next trade was on June 22nd, right here. What time frame is this? This is the 15-minute. So on June 22nd, let's see the trade that we took. Okay. So on June 22nd, we took a buy on Eurjpy. And the time frame that we executed on was the 30 minutes. We executed the trade on 30 minutes. It was in the New York session about 1700 hours. So June 22nd, 1700 hours. Okay, so where's 1700 hours? Somewhere here. Okay. 1700 hours. Somewhere here. So the way I called this trade on the chart here, it shows prices had broken a structure and gave us a retest. So it was on the 30 minutes. It was in the New York session, 1719 or something. So this is 1700. So it was right here, yeah. Okay. So here it was a long position. And our entry price, 156.46. Profits, 161. And stops were hit at 023. All right. So this was the shot that we called. Okay. So let's push that. So here the structure that I drew was somewhere here. This is the structure that I actually drew on the chart. The entries are the same and the stops are the same. So I executed the trade here as this candle was actually pumping above this structure here. Okay, so the trade, as you can see how it played out, right here we were risking about 42 pips, reached about 48, okay, 47 or something, 20 seconds, okay. So it actually pushed about 1 hour in our direction. So we would have been at break, we should have been at break even, but according to my data here, it doesn't indicate as if we went break even. Okay, so this right here, okay, so I need to be, I'm actually noting down these mistakes. So here, the first was a bad trade. Okay, so in this trade right here, we went over 1 hour in our trade as prices pushed, gave us kind of a retest, and obviously retesting this kind of structure here, and then it pumped 1 hour in our direction before what we should have been stopped at break even, before it flashed all the way down here. So in this trade, this was a lazy trade. Okay, maybe what time did it reach? Okay, so it was still about half an hour before New York closed. So I still would, I wasn't in front of the charts, but I should have, you know, sent out some kind of a notification that prices are now 1 hour in our direction and we should go break even. So this one right here, I think this was just a lazy trade. This was a rookie mistake again. This was a lazy trade because we were 1 hour in profits. This mistake, like this loss, shouldn't have happened. It was a good trade, break, retest, continuation. Prices went 1 hour in our direction. We should have been break even, but we weren't. So with this trade, we lost it because of poor trade management, right? So the trade on the 22nd, we lost it because of poor trade management. Okay, so that's the reason we lost this trade. This is a B trade, no pattern. Hey SK, so I'm just looking at your at your text right now. You're saying this is a B trade, no pattern. Were you talking about the first trade, right? Hope you are. But the first trade, that was just a bad trade. Why did you take the trade before the engulfing candle? This one right here? Yeah, I don't know. I have to be honest, I really don't know. I can't lie. Like, this should have been a proper entry, this right here. So for instance, had we taken the trade here, and I actually think I believe we took this trade here after seeing that we missed this entry here. So let's see, maybe on the 15-minute. So this is the 22nd. Alt G, 22nd, go to. This right here, this was a perfect entry. I don't know what was going on with me that day, because I missed the perfect entry, the entry right here. We didn't take this entry while it gave us this beautiful bullish engulfing, and then the trade went 1 hour in our direction, and then we still didn't go break even. So for instance, if we did take this trade, our stops would have been there. So how many pips would we have? We would have been risking about 35 pips. 35 pips, how many pips did the trade go in our favor? About 2 hour. That's 70 pips, about 2 hour. So okay. So yeah, the second trade, we lost it because of poor trade management. The entry was facilitated with this candle, right? But the perfect entry should have been somewhere down here, like this New York entry volume, like New York open volume would have been the perfect spot to take this trade. But we didn't take it here, we took it somewhere here. It went 1 hour in our direction, we still didn't go break even. So yeah, that's messed up. Yeah, I really don't know what was going on in my head that day, but okay, cool. No, it wouldn't have reached 3R, it would have been 2R, Federico, but still it would have been a beautiful trade. Still, it would have been a beautiful trade. But the second trade here, we lost it because of poor trade management. And that's the thing I always tell you in trading. Your first priority is to protect your investment, your capital, and that's can all be done in trade management. Such as here, we would have been break even, and we would have avoided one unnecessary loss here. So that was the second trade, or that was the third trade of the month. The following trade, we took it in July. We took it in July. It was on the 5th. Oh. Okay. So we took it. Excuse me. We took it on July. It was the 5th. So let's look at it. Man. But at least I'm reviewing my trades. It actually gives me the picture of what's really going on. Like, why were the months that slow? So on June, we have seen that in June, we actually took 3 trades on Eurjpy. One was a winner. We closed it at 1 hour. And then it went all the way to hit our targets. But it was proper management given the data that we had at the time. The second one, it was just a bad trade because the trend was bullish. Structure was bullish from the daily. And then we took a sell. So that was just a bad trade. And then the third trade, it was perfect. It was good. We took it a little bit late, but still it went in our direction at least 1 hour. We just didn't manage it properly. So if you look at all the June trades, we shouldn't have had a single loss on Eurojpy, because we would have had 2 trades, which one could have closed at 1 hour, and the second we would have been stopped at break even, but we wouldn't have lost any money on Eurojpy. But instead, we actually got 2 losses and lost about 2 hour on Eurojpy. Okay, so let's look at the third trade, or the trade that we took on the 5th of July. On the 5th of July, we took this trade on, it was also a New York session. 5th of July, New York session. Okay, so right here somewhere. It was a sell. Okay, so we took this trend line. Okay, no. It actually starts way back here. And then once it tapped that, I was looking for my entry. So we took the trade after we saw this bearish structure starting forming, and then it broke all the way down here and then gave us a retest somewhere here. So I was like, okay, cool. We should be looking for some kind of an entry right now. Should be looking for some kind of an entry. So we took a short. Okay, so it was actually on the 45 minutes. Right? So entry price Entry price was 156,711. Stops or the targets were 154. The stops were about 157, 177. Excuse me. So this was the trade that we took. Most of the times. So you can see in my entries, like for this session, we've taken the trade on 30 minutes, 15 minutes. Now we are taking another one on 45 hour. So most of the times I actually just take all my trades on those time frames. Right. So this trade, we took it on July 5th. Okay, so I see here the trade actually went all the way. Move stops to break even. We moved the stops to break even. It was properly managed. I like that. July 10th. Okay, so right. So this trade here, this one was properly managed. Okay. So we were risking about 48 pips and prices went about 133 or something pips. So it was mad pips, right? What time was this? This was another New York session. But right after we took the trade, you can see how it started ranging. So prices went all the way up here, started ranging, and then just dropped it like it's hot, right? But in this trade, the beautiful thing is we can actually see, like, it was a winner trade. It was a winning trade, obviously, but we can actually see how prices had first created a bearish trend, unlike the first trade that we took, which was against our trend. And then we got a proper retest, then we pulled the trigger. We just let it hang there. Prices tried to go against us, but then just dropped it all the way in our favor. And then I told you guys to manage it and move stops to about 156.20 as prices were pushing, because it was Friday approaching. We were having some fundamentals. I told you guys to move stops to about 156.20. Coordinates 156.20. Somewhere here. So I believe prices came back here, somewhere here after this turnaround, after this retest. Once prices started dropping, I told you guys to move stops here so that in case prices retrace and push past this high, we should just get out of the trade, because we don't want to hang on a losing trade. So this was about 53 pips, so it's about 1.5 hour. So this trade here, once prices started retracing, we got stopped out in profits at about 1.5 hour. And the funny thing is, I don't know why I actually wrote here. It's actually 1.5 hour. Okay. June 6th. Yeah, 1.5 hour. So we got stopped at 1.5 hour. This was a winning trade. So at least we understood the trend was still in play. We took advantage of it at the retest, and prices played out in our favor. So you can see how when we trade with the trend, how prices go in our favor. And obviously look at how prices kept on falling. Like, our targets were hit, but if we didn't move this stop until somewhere here, most likely most of the people would have been stopped at break even, because, you know, with spread and all that. As you can see, this was the New York's Asian session once prices reached here. So most definitely there would have been large spreads and people would have been taken out to break even. So this trade management gave us an advantage, and we actually secured about 1.5 hour, and then prices just melted all the way to take profit, right? We didn't get another entry opportunity here, but could we have gotten one? Like, let's ask ourselves that, because we already saw the trend. It was falling, it was massive, it was bearish. could we have gotten another sell opportunity? Let's try and bet our system here. Like we did that yesterday on Euro USD. Let's see if we can actually capture this move. If we were to, where would we have gotten an entry? So let's see if we got sloppy maybe. So there is a trend line here. No, it doesn't respect that, so we couldn't have used that. Okay, so no trend line. Okay, do we have a structure? There is some sort of structure here. Okay, there is a structure, right? So we have this kind of a structure here, because you see how it was respected back here, 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 and again here. So prices did pull back, but they didn't really hit that structure. But at the end of the day, they did retrace to give us on this kind of a level where there was a strong rejection. Okay, so the trend was still bearish. Obviously, we had a high, low, lower high, lower low, lower high, and then this happened. Okay, the entry here, this would have been way too early before London. I wouldn't have gotten this entry. I wouldn't have taken advantage of it. London kicked in, retracement. Here, I couldn't have taken the trade because prices just bounced off a structure and then created a low, broke below here, bounced off another structure. Okay, the move is kind of complex right now. The move is kind of complex. Could we have gotten an entry? Could we have gotten an entry? Okay, so so far I don't see a place where we could have gotten a clean entry. But right here, we could have gotten this aggressive entry. A clean entry, no, but an aggressive entry right here, we could have gotten that. So let's bar rip like this and see how it looked like perhaps on the 4 hours and the daily, because we actually have to look at it, the higher time frames, to know what we're dealing with, right? So from the higher time frames, we could have seen the trend had already shifted. We had these prices created a double top here, a lack of momentum, and the day before that, prices had created a strong bearish engulfing candlestick. So obviously we should have been aiming, or we should have been anticipating to see prices push until somewhere here for us to exit the trade. So on the 4 hour, did we get a confirmation? Our confirmation was right here. Our confirmation was right here. Okay, so this is kind of in the 4 hours. But this retracement though, this retracement was too much. Like if you look at it from a 4 hour perspective, look at this. Prices created a high, a higher low, and then a higher high. So entering here would have been gambling. Although it did give us this bearish engulfing, but the trend had turned bullish. So the only way for us to take this trade without trying to gamble anything would have been after prices had closed below this structure here, right? Because it would have closed below this low, then we would have been aiming for these lows down here. All right, so we would have been aiming for these lows here. Now let's look at that on the lower time frames, on the 1 hour. Okay, so on the 1 hour it looks clean, like prices created this kind of a head and shoulders pattern. You see we had a shoulder here, head, right shoulder, and prices broke below the neckline, some kind of a retracement, and then pump. Okay, so this 1 hour candle would have been the kind of entry candlestick, but on the 1 hour here, it doesn't look like it would have given us much juice. On the 30, let's see, because if it doesn't give us a good risk to reward ratio, I still wouldn't take the trade even if I know it's going to go my way. We would have been aiming for here. It would have given us about 2.5. So still it wouldn't have been worth it. Like we would have understood like trades have a very high possibility to reach there, but it's not really worth it, unless maybe if we pump it like that until these lows here. Let's see like that. If it gives us at least 3R, it would be worth it. 2.7. 2.7. Still not. So I always try to get the maximum out of a trade. And you can see here, I hate covering, like, these wicks indicate a rejection. I hate putting my targets on a rejection. So we didn't take this trade, obviously, and it was a beautiful sell setup, but it wouldn't have given us a decent risk to reward. It would have given us a 1:5, 1:0.27. So that means we would have been risking about 50. So once prices maybe reached somewhere here at 50, we should have been break even. Let's just play it and see how it plays out. But I really wouldn't have taken this trade because it doesn't give me a reasonable risk to reward. If it doesn't give me 1:3, I'm not pulling that trigger. Here, I was just looking for ways that I could have caught this sell setup. So next time in a scenario like this, once we already have our trend in alignment, we would have been break even by now. In our trend in alignment from the daily and the 4-hour trend, we will be looking for entries on the 1 hour like these. Because yesterday also on Euro USD, we missed a beautiful trade. It would have given us 1:3 with Euro USD. But it also required an aggressive entry like this one. So if the trend is in alignment from the daily and the 4-hour trend supports it and we have a confirmation of the 4-hour, next time we will be taking these kind of aggressive entries. So yeah, but in this particular scenario, obviously didn't give us a 1:3 because to where we are aiming for. But at the end of the day, we were just looking for how we could have caught this move. So we actually got our answer right there. So that's something we're going to be improving in our future trades. Okay, so that was the trade that we took on the 6th, which gave us a 1.5, not this one, but the one before this one. And then the next trade was on the 10th. It gave us a 3R. I'm not going to talk about that one because it was a winner. Obviously, what can we learn from our winners? We already know. That's why we won it, right? Today, I just want us to talk about our losers. Why did we lose these trades? Why did we lose 6 trades in 3 months? Why did we lose 6 trades on Eurjpy? That's very bad. And we've already seen reasons for 2 trades. One, it was just a bad trade. We took it without following all our trade rules. The second one was just poor management. It was a good trade, but we had poor management. So we already 2 trades, we shouldn't have lost them. So that means we are down to 4 losses. Let's see these 4 losses where we went wrong. So the next was on the 13th of July. Was on the 13th of July. Okay, so let's look at the trade and see how it was. 13th of July. Let's see. It was a buy setup. We took it New York. Man, I take a lot of trades during the New York session, eh? It was in the 15 minutes. Okay. Out G, 15 minutes. Okay, so let's look at New York. New York. But the beautiful thing, like, we made all these mistakes, we took all these trades, we had our losses, we had our wins, but at the end of the day, it's beautiful to see that our edge actually held us. Because with all those losses, we still ended up being profitable with Eurjpy. Like, it was still a profitable pair. So that's the thing I like. But at the end of the day, we could have done better. That's what bugs me. But hey, we're only human. We only improve. You gotta improve. We gotta improve. We gotta do better. Entries was in 154,700. Profits 155,656. Stops 154,513. 513. Cool. So this was the trade. We stopped out of the trade. Looks like it. Right. So we did pull the trigger while prices were here. So we didn't take the trade on this bullish candle. When I look at the image here that I sent the trade, we waited for prices to retrace on these minor structures here, and then we pulled the trigger right there. So our stops was somewhere here below this candle. So we were risking about 18, 19 pips. And prices only pushed about 12 pips before coming back to stop us out and then pumping in our direction. Now, okay, so with this scenario or with this setup, let's first and foremost look at the trend. Let's zoom out. Okay, so the trend was clearly bearish somewhere here, and then it changed into bullish, and we tried to take advantage of this move. Okay, cool. So the trend was bullish. We didn't make a mistake there. Did the structure be followed? Yes, it was a break and retest. We took advantage of that, but still got stopped out. Okay. Now, how could we have traded better here to avoid being stopped out? What's something that we could have done better? Okay, so just by looking at it here, what we could have done better, I think we could have given the trade more room to breathe. So I always put my stops just below the entry candlestick. Like, this was the entry candlestick, this was considered the confirmation candlestick, and our stops was kept right here just below that confirmation candlestick, and we got tapped before prices pumped in our direction. So I believe if we did maybe give it this room to breathe and maybe kept stops below this low, not the entry candlestick, maybe we could have avoided this loss. So let's look and see if we could have avoided it. So if we would have been risking about 21.5, and prices pushed all the way until about 27 pips before it reversed and stopped us out. So yeah, had we considered putting the low or the stops below the low, not the confirmation candlestick, we would have been safe. All right. Okay. So that's something to consider. That is something to consider. I'll have to backtest more to actually see, because right now our stop loss module is that we put our stop loss below the confirmation candlestick, not below the low. The confirmation candlestick that we use, that's why we put below the stop loss. But had we kept the stop loss below the low, we would have been safe and we would have been at break even while prices retraced and stopped us out. So with this module, I'll have to backtest more and see if some losses or if more losses will be avoided if we actually give this more room to breathe, and its impact on changing the risk to reward. Because remember, if you give it more room to breathe, the more pips you're actually giving, the less risk to reward you're getting. And the less risk to reward you're getting, that means it will take more pips to go break even, because the 1R will be further. And for you to close the trade at 3R, it will even be further, right? So I'll have to consider all of those while looking at this aspect of increasing stops to the most recent low, not the entry or the confirmation candlestick. Yeah, JJ, give the 15-minute room to breathe. Okay, so, oh yeah, that's also another idea. Or if it's in the lower time frames, such as the 15-minute, I could be giving it more room to breathe like here. But maybe on the higher time frames, entries such as the 1 hour, I can then just be using the confirmation candlestick as entries. That's something I should really be looking into. Thank you for the suggestion, JJ. I appreciate it. So this was another loss, but with this loss, I can't say we did anything wrong. We just followed our edge and then we got stopped out, which happens in the market. So we just have to embrace this loss. We couldn't have done anything better to stop it with our current rules, right? With our current rules of placing the stops below the confirmation candlestick, we couldn't have done anything to avoid this loss, but it was a beautiful trade. It was a beautiful trade. Prices were in an uptrend. As you can see, prices kept on pushing higher all the way up there, but it just wasn't our trade. Now, let's look at another loss that we took. So this one, I have no problem with. So that's the first loss that we could have taken, you know, perfectly, like a man. Okay, so July 5th. Okay, so another trade that we took. Okay, so SL 1, 2, 3, 4. Okay, hold on. I'm looking at the stats here. Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, I guess I'll just discuss it later on. But currently, let's get back to the back testing. Another trade that we took. This one was on 13th. So the next stop loss that was hit, and it was the last stop loss of the month. We took it at the 17th. So just a couple of days after that, we took a hit on 17th. This time around, '17th. Where's Monday? Is it something like this? Yeah. So we started using that point. We drew that trend line, extended it all the way out there. Did we have a structure? Yes, we did. It was a structure, but it was a weak structure. As you can see here, it reacted. Here it was kind of violated a bit. And then here it was back to being respected, right? So this was the last trade, or the last stop, the last trade that we got stopped out of on Eurjpy. Short trade. We took it after we saw the third touch on this trend line, confluencing with this structure. It was a solid bearish engulfing candlestick. Prices tapped that. Okay, so we need to look at our entry point. Our entry point was 155.544. Profits 153.676. Stops 156.024. All right. So let's see how this trade played out. So prices started ranging. We took the trade, started retracing a bit, and then pumped lower, and then all of a sudden just boom, went all the way up there. Okay, so did it reach 1 hour? So according firstly to our entry criteria, we were risking about 48 pips. Should have been at break even once it hit 48 pips. So it missed us for us to go break even by about 4 pips before it retraced. Did we manage it properly? Stop loss would have been at break even if we were break even, but if we went 1 hour, but we didn't go break even because prices hadn't reached 1 hour. Now the trend, how was it looking like? Okay, so we had these lows, prices created lows, lower lows, pumped, low, high. This is a lower high. Right. See that? So because prices were here, this is where we took our entry. So let's look at it from a daily perspective. From the daily perspective, okay, so prices were kind of bullish. The current day candle was still a doji. It was a doji, obviously, but it closed below this low. So okay, it was a nice indication. The 4 hours prices were indicating some kind of a, okay, so the larger picture, here's the thing. So you have this big trend and the small trend. So the large trend indicates that prices are in a bearish trend, because you see we had these highs, prices were creating higher highs, and then prices here started creating this crazy downtrend. But here you have this minor bullish trend. Obviously the bigger trend is stronger, but this, we have a minor trend here, right? And I think we actually just looked at the biggest trend, and we decided to take this trade. And it started by doing that. Like, look at what happened. Like, I remember this trade, the way it was playing out. Like, I was so hyped. I believed it would just go break even almost immediately. Look at how the momentum was. It just started off by a crazy bearish momentum. Look at it. Look at that. Would you have doubted this trade? Like right here, I was just sure, like, okay, break even will be hit very soon. And all of a sudden, just boom. When this formed, I was like, okay, but prices have already broken below this most recent low, right? Prices have already broken below this most recent low. So we still have a probability for prices to just create a lower high and then pump lower. And then all of a sudden just whoop, stop losses. Jesus. So, okay, cool. I was like, okay, it just happened. But according to this trade here, I'd say this is a decent trade. Like, because we followed the bigger trend and it gave us a B2 setup because we had two confluences giving us a sell indication. We had a structure of a resistance and a descending trend line pattern that was on its third touch. And then this solid bearish candlestick right here, that was our entry candle. So I really don't have any doubt if this was a good entry. I know it was. It just didn't play out. So that happens, if you will, right? So that trade was the last loss that we took on Eurjpy amongst these 3 months. The following trade, we were stopped at break even. And then the last trade that we actually took on August 22nd, we went 3.2R. So that being the biggest win amongst all the 3 months. And then the second win was on July 10th, which was 3R. So yeah, Eurjpy still a profitable pair. Now let's look at if we removed, for instance, those bad trades that we took. So I'm reviewing something here. If you remember, there was a time I had something to say and then I said I'll talk about it at the end. Okay, July 7th, we had this buy. June. Okay, so okay, never mind it. Yeah, so the total number of trades that we took was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So it's actually 11 trades, not 12 trades. That's what I was trying to actually make sure. 12 trades that we took, and the stop trades were 1, 2, 3, 4. It was on June 8th, June 22nd, June 13th, and 17th. 1, 2, 3, 4, 5. No, it's 5. So it's actually 5 trades, guys. It's actually 5 trades. So it's 5, 3, 4. So that gives us about 9, 11 trades. So we actually took 11 trades. So 7 out of 11. Ah, 63. 63 here, minus 5. Okay. I don't know why I got that other trade, where I got it from. It actually changed our win rate again. So it's no longer 53, 63, because the loss were removed. We didn't have 6 losses, we had 5 losses. Because I was trying to look for the 6th loss so that we can actually see how we can backtest it, but I can't find it. And I've been looking again in the chart, I can't see it. I don't know why I counted 6 losses. So we had a total of 5 losses. So that means it will be 5 minus 8 minus 5. It will give us 3. So these are the stats for Eurjpy for the past 3 months. Which day was that? At 1.5, June 6th. Let me check. I'm not sure. I can't find it here. So I'm not really. June 6th. By the way, if you have any question, now it will be your time, as I'm checking again this trade to see if I can find it. But at the end of the day, guys, it's all about removing the small things, or it's always about daily improvement while you're backtesting. Because imagine, okay, so let's say these are our stats, right? And then here, you remember the first 2 losses. We shouldn't have got those 2 losses. So that means here, these trades here, like one trade we shouldn't have taken completely, and the other we shouldn't have lost it, because we should have been at break even. So that means we would have booked only 4 losses, and then the other one would have been break even. So it would have been, we would have been stopped out of 4 trades, 4 break evens, and 4 wins. which would have given us an 8 advantage of 8 against 4, right? It would have given us an advantage of 8 against 4. But hold on, this still gives me 12 trades. It's not 11, it's 12 trades. 7 divided by 12. So it's not 60. Guys, I'm sorry, and nobody's telling me anything. It's 12 trades, not 11 trades. It's still 12 trades. So even when it was split into 444, it would have been 8 divided by 12. That win rate would have been 66% from 58. And this loss would have been eliminated. So again, our win rate would have increased to 4.7 ARA. So it's the small things that once you eliminate them in your trading, that's what they make your edge sharper. That's what they make you a better trader. Like sometimes you may see these 1% increments are nothing, but if you compound them, if you do that in 3 trades, that's 3 ARA. If you do that 3 times a month, that's 9 ARA. Like it's the small compounding trades that actually make a difference. So we should never ignore the small trades. We should never really ignore the small trades or the small wins. We should embrace them. Yeah, I don't know if you have a question, guys. If you have a question, the floor is yours before we wind up. But I'm glad that we've actually seen some things that we were sloppy on Eurjpy. We got kind of sloppy. As it was actually at the beginning of June. We got kind of sloppy trading Eurjpy and got 2 unnecessary losses. So that's something we should never have done that. So we need to really embrace our edge, trust our edge, review our trading plans so that we won't get sloppy. You know what I mean? Great class. How to review mistakes. Thank you, Federico. Thank you. Do you treat each pair the same or each pair has a different setup details? Wira, I use the same setups like with all my pairs, but I think the only difference that ranges is how I actually analyze them. Because for instance, with Eurjpy, I don't really look at it as it is. I always analyze JPYX and then I come back to look for entries on Eurjpy. But rather, like if you say on Euro USD, I'd be analyzing DXY to look for entries on the Euro USD. But setups, I always use the same tools, market structures, trend lines, Fibonacci's. I use the same things, but just different analysis, if you may. But yeah. For some reason, thank you, JJ, and thank you for actually saying I took the other trade. I remember there was a day I did that, but for some reason I can't, for the life of me, I can't find the day that we actually pulled the trade. I'm looking for the 1.5 win. It was on July 7th, but on July 7th I can't see if I called again the trade. So let me look, maybe it was on June 7th, because we also had a beautiful about 1.2, 1.3 R. Maybe it was then that we called the short, because I remember I did that Sunday. Yeah, I remember that. Okay, well, I can't even see June. Anyways, let's just let that be. But we've seen places where you need to improve. We need to improve. Yes, we are still profitable, but we can do better. So that was the backtest on Eurjpy, guys. Thank you for your time. Thank you for showing up. Thank you for staying with me until the end. Hopefully you gained some values, not just me correcting my mistakes, but thank you for joining me. Hopefully we'll grow together, and next month we'll have a killer month with Eurjpy, because this is one of the best performing pairs in our watch list. So I believe we'll still have a winning trade or a winning month next month, and a killer month, obviously, because there'll be enough volume. But till next time, guys, I appreciate you. I'll see you guys tomorrow, same time, same place, where we'll be reviewing USD, JPY, and gold. Till next time, guys, appreciate you all. Take it easy out there.